Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be having a look at where the possible end of the current bull market will be, based purely on what's happened in the past over the previous three cycles, because they're giving us an incredibly strong clue as to where we're heading. I'm also going to have a look at the Wall Street cheat sheet to look at the stages of the bull market and see exactly what the emotions are, the psychology, and what we really need to guard against over the coming many months. And as per usual, we'll have a look at exactly what's in the news, what's going on in the wider markets, and also have a deep dive on the 60-day cycle to see exactly where Bitcoin is now and where it seems to be heading in the coming days and weeks. So if that sounds interesting, then you know what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. So what I'm going to do is to present to you today what I showed my members last week regarding the end of the current bull market. And the trigger for that was simply because many people think that we've topped out already at $90,000. And while we can never dismiss any price because we're in the space with Bitcoin where anything and everything is possible, so we've always got to keep everything on the table. But there is a little matter of the probabilities. What are the higher probabilities and what are the lower probabilities? And I would say 90,000 is a low probability end of the bull market. So when I do this analysis regarding the end of the bull market, you'll understand exactly why the higher probability is that we've got quite a long way still to go for the current bull market. And so what am I talking about? And this is something I showed over a year ago. And now that we've had this halving, we can do the next analysis regarding the end of the bull market. So what I'm going to do is I'm going to go cycle by cycle to show you exactly how the halvings have actually given us a very strong clue as to the end of the bull markets in each of those cycles. Okay, so we're going to stay on the monthly time frame, and I've moved this chart to the left here to take into account the next halving around March 2028. So this is the full picture now up to the halving of 2028. So just to explain these lines, the red vertical line are the halvings, the yellow vertical lines are the tops of the previous 4-year cycles here. We've had 3 in the past and we're expecting the 4th one around here at this point at the end of 2025. So taking the measure from the halving here, the first halving back in 2012, if we measure to the left first, which was the low of the cycle, we can see that there was 366 days before the halving that the market had bottomed out. And if we do that to the other side where it topped out, to this yellow line, you see quite clearly it was virtually the same days, 365 days. So the halving predicted the low of the cycle as well as the high of the cycle. So the question is, did this pattern continue in the following subsequent cycles? Well, if we move to the second cycle here and do the same exercise, to the left here, the bottom was on this candle, and that was 547 days. So if we take it to the other side, the top of the cycle was 518 days. So within 30 days of this mirroring pattern, we topped out here. And if we do the same for the previous cycle, the third cycle of the halving, so once again, from the red line to the bottom, which was this candle here, that was 517 days. And the top from the halving to the 69,000 was 549 days. So once again, within 30 days of the measure from the halving to the bottom of the cycle, we also get the top on the other side. So what you're really seeing here is a mirroring pattern where the halving is the dividing line. And the question now is, where are we now with the current cycle? Where can we expect the top of the bull market to be? So based on the historical perspective, if this chart plays out like it did in the first cycle and the second cycle and the third cycle, then the current halving, the 4th halving, if the charts are to play out exactly as the same, and we know that Bitcoin can throw a curveball, so we must always have that on the table. But so far, 3 cycles out of 3 have given us a certain pattern. And if this was to continue, and there are no guarantees, I don't have a crystal ball, nobody knows the future, but if that was to continue, then the measure would be this. Taking from the halving on 19th of April this year in 2024, if we take it to the 15,400 back in November, that once again gives you 517 days. So remember, the previous cycle was 517 days. So this cycle is very similar to the previous cycle here so far from the halving. And then going to the other side, 517 days will take us to September 2025. And if we give a wriggle room of around about a month, like happened in the previous cycles, then the next month on there, then 30 days from there would be October 2025. So everyone can make up their own mind of where the end of the bull market will be. Everybody has their own narrative, and I'm just presenting to you what exactly happened in the previous cycles, extrapolating and eliciting that information to the current cycle. And this is what we get. If the first cycle, the second cycle, and the third cycle are to repeat on the fourth halving cycle here, then we should be coming to the end of the current bull market in September or October 2025. And if Bitcoin decides to do something completely different, then obviously that would mean that out of 4 cycles, 3 will have played out, then we'll have 3 cycles playing out one way and a 4th cycle playing out another way. But the way to always process this is that cycles will continue to be what they are until they don't. So at the moment, the cycles have played out in a certain way. So we can say with a higher probability, no guarantees, no certainties, that we're more than likely going to get to around about September or October 2025 before this market tops out. And we've seen with a lot of the historical perspective that I've presented over the last 12 months, when we've looked at a lot of information on the first cycle, the second cycle, the third cycle, and comparing all that in the current cycle, many of it has actually played out very similarly, if not the same. And some of it has not played out like that. So sometimes you will get the current cycles playing out differently from the previous cycles. So that is always going to be on the table, and everyone can make up their own mind of where this is going. So those people who say 90,000 is the tops, while we can never dismiss that, the higher probability seems to be that we're going to continue until towards the end of 2025. And what I want to move on to now is this breakout that we've had in the last couple of weeks. So what we've now got is on the monthly time frame, we've got an incredibly powerful move and breakout to the upside here. And this has created a huge amount of interest from the very people we know will be when the parabolic move for Bitcoin starts. And what we need to do is look at the interest that this has generated with all the major media outlets reporting this breakout. And this is where we are at the Google Trends, looking at the interest over time. We can see that this blue line, which actually represents the interest in Bitcoin over the period of time, and I've got this over the last 5 years here. This is virtually April 2021, where we topped out at 64,000, which was the first top. And by the time we got to November, the interest in Bitcoin had actually waned down, creating this divergence from the share price. And what we see currently now is that with the current breakout that I've just shown you over the last few weeks, we've now got a big surge of interest to the upside here. And while we expect that interest to top out at 100 when the bull market comes to an end, we can see that currently where we are, there's a huge gap between the two. So this would suggest also, if you're going to use this as an indicator to exit the market at the end of the bull market, then so obviously there's a lot of room still to go here. So what happens when we have this bit of interest now that's being generated? What I want to do is to really safeguard the subscribers here from the emotional turmoil that is about to engulf the market over the next 6 to 12 months. And to do that, I'm going to look at this particular psychology of the market cycle as presented in this particular graph, which is labeled the Wall Street cheat sheet. So we've been following this over the last few years, from time to time, trying to tell us exactly where we are in the current cycle. So as you saw with the interest that's being generated in the retail, we're basically now moving from the belief stage to the thrill stage here. And this is where everybody's now telling everyone else to buy. This is where the interest is now being generated in the retail. And I can tell you that just in the last couple of weeks, in the local gym that I go to, I'm now starting to get people coming to me because they know I'm interested in crypto and that I run this channel, and they're all now showing interest in wanting to buy into Bitcoin. So that's telling you a little bit about what's happening out there. And the characteristics around here is that there is rapid price appreciation going on. And that's what we've seen with Bitcoin. It's moved from 70,000 to 93,500. And the other characteristics that you will notice is that there's a lot of media hype now going on. And the investment sentiment is very much overwhelmingly that of excitement. And we're going to be moving from that excitement over the next coming weeks as we move towards this top here. And as we've seen with the analysis, this is more likely to be September, October. So this is like a 10-month view from here. And the higher we go, there will be manic euphoria, manic behavior, with people doing all sorts of things like maxing their credit cards out, borrowing money, selling things, and trying to put everything on the rising bull market here. Especially at this point, this is where the manic behavior will be absolutely at its ripe. And we've really got to guard against this, because one thing most people will notice is that once you do get to the top, look how quickly it will try and knock you out. So within a few days, you can go from the top there all the way past the thrill stage to these levels here. So anybody buying along here will be taken out by the sudden fall in the market at the top of the bull market there. So this is what you've got to guard against. And the best time to have got in was to be below this price. This is where you want to add in order to capture this bit here. But what is going to happen is that people only get interested when they can see the prices rising. So at this point, things are doubling and trebling and quadrupling even. And so everybody puts everything on here. But look what the market does. It takes you out at this point. So this is not the time to add. And this is what I want to guard everybody against. At the end of the day, everybody's got to make up their own mind. My job is to highlight what the psychology is, what the emotions are, and not get into something what we call irrational exuberance. Because once you get past this thrill stage, everybody's going to believe that the prices can only get higher. But somewhere along the line, it's going to come to an end. And it's going to be very difficult to get off here. Incredibly difficult. Even though we've got our Brexit indicators, there will be universal belief that prices can only go up, and there will be relentless media coverage, extreme overvaluation, extreme exuberance, extreme excitement. Under those circumstances, it's very difficult to get off here. And that's why we need to take a clinical view that from where we are currently to the next 8, 9, 10 months, whatever it's going to be, September, October next year, need to keep a level head above water, keep clinical, keep open, fluid and flexible, while everybody around are going to get caught up in the emotional excitement and emotional over-exuberance and irrational behavior. And just moving on to what's in the news, just want to highlight this thing here regarding what I've just said, is that those who are going to take the benefit from the current bull market over the next 6 to 12 months at least will be people like this. They've already put most of their wealth into Bitcoin, and they've already seen a big rise in their wealth. The time to do that was during this period of consolidation where everybody was doing exactly the opposite. Most people were moving out. So this is where the smart investors were actually buying the Bitcoin. Even if you bought here, or you bought here, or you bought here, or you bought at the higher prices of this range. These were all the last opportunities of buying in this consolidation. If you bought anywhere around these levels here, then firstly, you would have benefited from this big move to the upside. And as we've seen, the probability is that this is going to continue to the upside until towards the end of next year. So all that benefit is now going to be lost by those people who doubted whether this market was the last opportunity in this consolidation here. But to be fair to everybody, the market is incredibly mature in terms of how it can easily get you into a false sense of security that this is going to go to the downside. And hence, very few people actually buy in this consolidation. And it happens time and time again in every single cycle. And that's why the market always wins with the majority of the people. And that's why only 5% of people actually take advantage of these types of moves here. And if we move on to the liquidation heat map, we can look at the range of prices that we can expect Bitcoin to be ranging between over the coming days and possibly weeks. And that is that the biggest zone down here is at around about 90,000, just below the 91. And of course, there are lesser zones down here. So these are all possibilities. But if Bitcoin is going to be breaking to the upside, then this would seem that there's a little bit of a floor at around about the 91 mark, 91 mark. And to the top side, you've got the leverage players with their stops, with their short stop losses at 93,000. So this is probably still the range that we're going to be operating in unless we have a breakout above the 93.5. And much of that has been fueled by the Bitcoin ETFs here. And if you look at the asset inflows and outflows, and as I've been showing over the last few weeks now, the holdings over the previous 7 days has actually been going through the roof. So you can see with the IBIT ETF, the BlackRock ETF, just in the last 7 days, we've had over 21,000 Bitcoin inflows, while the outflows that we were getting over the last 10, 11 months with the Grayscale ETF, this has now virtually come to a standstill. And much of what they're losing in one exchange, they're also gaining that in their cheaper version with inflows here. So you can see these are being negated now. And if you look at the Fidelity ETF, you can see another 14,000. These are unprecedented numbers. These are some of the highest figures we've seen since the ETF started in January. So there's a huge amount of fuel that's going into the current Bitcoin price. And we can only see that going much higher in the coming weeks and months. Okay, I'm going to move on to the wider markets and see exactly what's happening in the conditions surrounding Bitcoin. And the first one obviously is to look at is the dollar. And what we're seeing is an unprecedented correlation at the moment with the dollar rising at the same time as the other markets doing exactly the same. You would expect an inverse relationship, but from time to time we get this very strong correlation between the markets and the dollar. And this is one of those periods at the moment. So we expected some kind of a counter trend rally here after a very strong move to the downside. And as you can see here, it's caught me completely by surprise because this is where I would have expected with a higher probability for this to start coming back down. This was a 61.8 from this level to this level. So at around about the 103 mark was where the 61.8 was. And I marked this other yellow zone here at 104, which is the 78.6 Fibonacci retracement. And once again, you can see there's been a breakout even from that level there. And what we've got is this declining trend line, which had created these lower highs along the way. This is where you would have found the final stop of this trend here. But instead, what we've got, we've moved to the next horizontal resistance line at these points here. So this is where we're at around 106. And the next target has got to be the previous horizontal resistance here. So this is where you would expect, once again, for the dollar to top out, which would give a little bit more breathing room for the other markets like Bitcoin to move much higher in a more rapid fashion. So let's see what happens. But certainly the strength of the dollar has really taken everybody by surprise here. Okay, if we move on to the SPX, we've got a little bit of a premature decline in the market here. And this was really due to the comments by Mr. Powell last Friday that he was in no hurry to actually reduce the interest rate. So it just caused a bit of a flurry back down to the support lines or resistance lines here. But what we've got is really the loss of the 8 EMA, this blue line. So you can see normally in an uptrend, it tends to provide a lot of support to the upside. But from time to time, we do lose it. And that gives you a period of consolidation. So now that we've lost this, it may be enough to bring this down below these resistance points here. So we could see a period of consolidation over the next few days. But as you can see with the cycles, this is where the cycles really come into their own. They're giving us a timeline in terms of where the prices may go. So I would expect that going into the midpoint, just like what it did in the previous cycle, we've got a very similar type of a big run up very, very quickly at the beginning of the new cycle, just like we did here. And then we got a consolidation well before the midpoint. You would have expected this more down here a little bit later. And this is exactly what we're getting now here, an early correction. So we can expect, just like what happened here, to go strongly into the midpoint. So once this consolidation is over, you can expect a strong move into the midpoint, another correction like this one, maybe around here or just after it, before we move further towards the end of the cycle here. So overall, it's still looking bullish to move further ahead, based on these cycles and the timelines here. And this seems to fit in with what's happening with the USA elections. The inauguration is around the 20th of January. So that'll be around here. So this is where you would expect a sell the news event for a pullback, wherever this is going to be, you'd expect some sort of a pullback from the 20th around here into the end of the cycle, this red vertical line before the start of the new cycle. Okay, moving on to gold, as we've mentioned over the last few weeks, that this big move in the monthly time frame where we had 8 green candles out of 9, we were expecting some sort of a correction that was overdue, and we started getting that from last week. So we saw this red candle, the monthly candle, which is now so far, and we're on the 18th of November, is turning into an outside bar bearish candle on the monthly time frame. So it looks to me, if this closes the way it is at the moment, and as I'll show you on the weekly time frame, it looks highly probable that we're going to end the month as an outside bar bearish candle. So there should be more pressure to the downside for the gold. So I'm expecting more of a correction back to lower levels. And if we have a look at the weekly time frame, I'll show you exactly why this is more than likely to be the case over the coming weeks. So in last week's video, when I was covering the gold, I've highlighted this candle here. This is the gravestone doji candle. It has the power to do so much damage, because when you see that at the top of any trend, like we got over here, you can see that the next candle was to the downside, but the power of this move from the breakout here was so strong that it negated some of these bearish candles, and even this one here. But we still got 1 week of a correction before this started to power ahead even more. But now we're in a different place. This power move is now towards the top of the trend, a much higher price, and with 8 candles out of 9 on the monthly, this is more than likely now going to play out to the downside. So as highlighted last week, this is now playing out, and there may be a little bit more to go. And the price I was mentioning last week was this one here, down at 2,600. And we're down to 25 here so far. And one of the signs that's giving this away that there is a little bit more to go yet is that we've lost the 8 EMA on the weekly time frame. So we can see quite clearly here, we found a lot of support all along here, but now we've decidedly moved to the downside. So there seems to be bearish pressure more to the downside coming up. And on the simple moving averages, you can see that the 21 simple moving average, the yellow line, is where it's finding support. And this is where the potential is for it to go all the way down to the 50 simple moving average. And that's at around 2,300. So expect a further move down towards the 2,300 for gold. But when you zoom out on the monthly time frame, you can see quite clearly that we're having a lot of momentum to the upside, and it needed a period of consolidation around here before we move further as a continuation pattern to this. So on the larger time frame, it looks quite clear to me that the bull run is still intact and we've got much higher prices to come. But what we really need after a big powerful move here is a period of consolidation, a bull flag here, before the continuation to the upside. And silver seems to be following the same trajectory, because this is the monthly time frame. We had a breakout, but it seems to be coming to some sort of a premature end here. And on the weekly time frame, we've got the similar gravestone doji candle here that's pushed the price down. So once again, there is weakness to the downside, and there's a little bit more still to go, just like gold. Okay, if we look at the Bitcoin 60-day cycle, this is what it's telling us in terms of this time framework that we've got with the 60-day cycle. So we bottomed out here on day 59 on the 4th of November, and from there we're on currently day 14 of the new cycle. And as we are early in that cycle, we have a lot of room still to go to the upside. We're having a little bit of a consolidation here. But as you can see, the consolidation from this breakout is right at the top end, i.e. the top third of this breakout here. Now that would always suggest that there is a continuation to the upside from there. So this is just a minor consolidation before we move back to the upside. Now, of course, this consolidation can continue into the midpoint, but as we can see with this rising trend line at the bottom here, creating the higher lows on a flat top, this is an ascending triangle. So it's forming a very bullish ascending continuation pattern. Where this breaks out, nobody really knows. But when we measure it against the cycles, we would expect this breakout to be well before the midpoint, which is going to be on the 4th of December. So within the next 7 days, I would expect this to break out and then to have a fall back into the mid-cycle here around the first week of December, and then to go again towards the end of the cycle here in the first week of January. So we should really, based on the timelines of this 60-day cycle, we should be very close to breaking the 100,000 or finding resistance around the 100,000 between now and the end of the current cycle in the first week of January. And once again, this would make sense because the inauguration is on the 20th of January. So if we move this to the left here, when we come to the end of the current cycle around the first week of January, we should make a strong move back until around about the 20th of January, which is going to be around here. So if we move very strongly into towards the midpoint of the next cycle, then that becomes a sell the news event into the midpoint to shake a lot of the people out, and then to go again for the second half of the next cycle, which would take us into March 2025. And the price there could be well into the hundreds at that point. And today I'm going to give you a rundown on the time frames to see exactly where Bitcoin is and to see if there are any signs that we are topping out. So if we go to the monthly time frame here, what we can see is a very strong Marubozu candle at the moment. We're on the 18th of November, so we still have 12 days to go to the end of the month. So it's looking like at the moment a strong green candle. And if we put on the 8 EMA, we can see quite clearly here that ever since we recaptured this 8 EMA back here in October 2023, we found solid support all along right up to this point. And once again, this candle bottomed out at the bottom here around 66,000. So no sign really of any topping out on the monthly time frame. And if we have a look at the stochastic RSI, this is giving us a very strong signal that the momentum is moving to the upside here. So there seems to be a long way to go from the sentiment point of view, from the momentum side, to go further to the upside. And the weekly time frame, once again, we're just entering the overbought position here. And as we've seen with a little bit of the correction going on, we are in overbought territory here. So we could get a period of consolidation before we move to the upside. But certainly no particular sign here, especially if we put the 8 EMA. And at the moment, the 8 EMA is at around 77,000. So if we do have a correction, it's probably going to meet the 8 EMA up here somewhere around the 80 plus mark. And we know that in the parabolic move, the Bitcoin price tends to find support historically on the 21, the yellow line here. So we can see that it's now started with a trajectory to start move to the upside. So we need to keep an eye on the 21 simple moving average as it moves further to the upside. So this should carry us much further up over the next coming months. And if we put the Bollinger Bands on, we can see we're clearly at the top of the Bollinger Bands here, so we are very much into overbought territory. We should expect some sort of consolidation to bring the price within the range of the Bollinger Bands here. And as we saw here, once we get out of the Bollinger Bands, there's a strong inclination to move back in, just like over here and over here. So we could quite easily have a few weeks where we go sideways here before the inevitable breakout, but certainly no downward pressure, no real topping out signals going on here. And on the daily time frame, we can see that the price did go above the Bollinger Bands, and now over the last few days it's now come back in, and the middle of the Bollinger Band there, the 21, is at around 80,000. So even if it comes down to the 80,000, there's nothing to really worry about because you would expect a strong bounce from there. So there you have it, a rundown on the time frames. Doesn't seem to be much signs of any big pullback around the corner. And those of you who are interested in the Bitcoin miners, the private member section that we cover here at Wisdom Bites with 2 videos on the Wednesday and the Friday, the Bitcoin miners represented by CleanSpark here may well be presenting a very good opportunity. Please remember the Bitcoin miners are a leverage play, which we saw from the bottom of the bear market at the end of 2022. This ran up during 2023 by nearly 12 or 13 times, while Bitcoin went up by 3.5 times. So this was a 3 to 4x play during 2023. But certainly while Bitcoin consolidated since the beginning of this year, these have really suffered and come back down. So anybody who got in at this period here will not have experienced any leverage play, whereas those people who started right at the bottom here can see that there was a big move for the Bitcoin miners against the Bitcoin price. But when you zoom out, you can have a look at the bigger picture view, and that is showing us quite clearly here that this is a bull flag. And this is a continuation, as you would expect, in the classical charting. So what we've really got is one more big leg, just like this one here. And of course, being a leverage play, it's obviously a very volatile space. So if you're of the disposition of not being able to cope with the volatility, where many times you will be 30, 40 and 50% down like we've seen here. But if you can manage to ride those out, you can take advantage of the big moves here. And what we've got currently is another opportunity, because from this point here to where we are, we can see if we do the measure, we're still around about the 40% below the recent high. So CleanSpark went all the way up to $24.50 and currently at $14. This is sadly where a lot of people will move out of the market because they can't cope with the volatility. And that's absolutely fine. Everybody's got to make up their own decision. But if you take the full view of the full picture here, if you take the full cycle as presented here, you can see that these big moves to the downside, this was the bear market. Then we had a massive move in 2023. Now we've had the consolidation. And now we're coming, as we've seen with Bitcoin, as Bitcoin's moved into its all-time highs, the Bitcoin miners are presenting what I would regard as a once-in-a-lifetime opportunity. Whether it realizes, nobody has a crystal ball, nobody knows that. But all we can go by is what's happened in the past. We had a massive move here during the parabolic move of Bitcoin back in 2020 and 2021. And the charts would suggest that we're going to get another one here over the coming 8 to 12 months. So if you're interested in that potential move to the upside, and if you want to join us with the private member section, all you have to do is click the join button here below all of my videos. And also in the description box here, there's a join link where for the price of a coffee per week, you can have access to the Bitcoin miners and their potential from now until the end of the bull market. Okay, we're going to leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. If you got any comments, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.